The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Monday edition, January the 25th, and my pleasure to be here Monday through Friday, 11 o'clock until noon. And just great shows starting off at 8 o'clock this morning. Tomorrow we start off at 7 here at TFNN. Stay tuned because after me you got your swimming lesson. You've got probably a repeat, but then you've got Steve Rhodes at 1 o'clock. You've got Dave White at 2 o'clock, Tom O'Brien at 3 o'clock to 5. Whoa, busy day. Well, let's go straight to it. Now, I spent over the weekend now for those subscribers. Yep, you'll be able to get to the site soon, I'm sure. Just having some little technical difficulty with my newsletter site there. But there were 2 new recommendations. There's still plenty of time. They haven't come down to those numbers yet. So that's okay. By the time you get in, maybe it'll be time to just place trades. We'll see. Meantime, back at the ranch, what I did this weekend, I've been doing this for about 6 months. I've been working on a particular methodology. I can call it a methodology. It's a system. Call it a methodology. And within that context, what it does is it takes all the work that I've done up until now with the MACD, the stochastic, and just a little bit of Elliott wave, actually just one characteristic. That's all it is a characteristic of Elliott wave, but it is based on my methodology. And I've been working on it. So over the weekend, this weekend, last weekend, I spent a lot of time. I did send out many charts for my subscribers, and I did give an overview of what I'm looking at. And because key metrics have been taken out, there's no question that I'm looking at lower lows and lower highs for at least the foreseeable future, probably into February, maybe even into March. And then I suspect we're going to have an extraordinary oversold condition when the Fed decides that it has maybe made a mistake. And that's what we're going to be looking at, because there's just no question in my mind, based on a number of criteria, that we've been in certain sectors, we've been under a kind of a recessionary process. But now I think market-wise, we're looking at a recession. Shorter term, there could be some upside still to go. I suspect that people thinking that we're in for a very long rally phase will be mistaken, because once you break certain parameters, and we've done that in a number of key sectors like the IWM and the New York Stock Exchange, you really have to be very, very careful. The generals like the Dow cannot lead the soldiers. You just have to have everybody participating together. Even with modern technology, even with the 3D and 4D and 5D, whatever you want out there in the field, you still need the soldiers moving with the generals. So the E-mini down is down 15 at 1883.75. The weekly chart broke its left side low of August of 1824.25. It went to 1804.25. Now I'm hearing over the weekend and listening to not many, but maybe a couple of shows. Was it Friday? I'm not even sure. Or was I reading? Whatever it is. Oh, and some emails that I got about the candle that was made on last week in the weekly charts. Let me show you something. You see that candle there? That's not neither is this candle right here, a Chapman wave Roman candle. That's the candle of August 28th of August. That's the week of the 28th. Those with a skinny wick, either you take out the left side high immediately or within 2 bars, or else any rally is doomed to fail. Now, there was a huge rally which made a Chapman wave H pattern or a right shoulder failure pattern from the 2110 all-time high back in July to the, let me just move this because I want to see something here. Yeah, so to the 2102.75 high that was made, and that was made the week of the 6th of November. So I'm suspecting that the wick of this candle is going to be tested sometime, fairly sooner rather than later. Now, that doesn't make sense. Sooner rather than later, I should give you a number on the upside. Well, 1950 is the 9-period exponential moving average on the upside. I just don't see us getting there. I think we're going to have a rally, and I think we'll make a leg A, maybe even a B over the next week or 2 or 3, and then we come down. I'm even looking at this and saying, you know what, if the S&P, the E-mini futures takes out 1815, it's a real problem. So here we go. The numbers. INDU. The Dow right now is at 15,975, down 117. To have made a peak A after only 2 candles to the upside, if today we don't make a new recovery high, is one thing. But to close, if there is a close, no. If we take out the low of Friday of 15,921, that's 52 points from here to the downside, that will suggest to me that a whole bunch of things are happening, and that the weakness that I'm starting to see in the monthly chart is negative enough, let me show you right here, to say that the Roman candle of August in the monthly chart, having gone all the way down to the wick, but not taking out the 15,370 level, that is still something that you've got to keep in mind as almost certainly going to happen. When I say almost certainly, I mean once you get to this candle, this Chapman wave Roman candle, you start to break down, the breaking of the wick is almost a requisite. It is almost baked into the candle itself. So I'm watching this really closely. That's number one. Number two is the MACD and stochastic in the monthly charts now are so poor that it would take a huge move to the upside. And look, we're testing this support level. We've taken it out, but we haven't closed below the dashed pink line. So all of a sudden you're listening to me in a different, because I'm a technical analyst. Once technical support levels have been broken, in the larger context, in other words, the weekly chart and the monthly chart, and we've still got 5 days to go to Friday before the month ends in January, I'm watching this really closely. The stochastic and MACD in the daily chart show enough support to say, hey, the 15,867 level in the 200-period moving average of the weekly chart that I'm pointing to right now, that should hold. In the chart that I showed for subscribers, where I go to the 16,500 level in the daily chart of the Dow, that's a lot of points to go to the upside. Now it's even more. Now it's 600 points to this, almost 700 points. That's a lot of points to garner, and a lot depends on where we close today. I thought that today was a chance of a pullback. My thinking was there'd be a mixed close with the Dow maybe minus 40 towards 3 o'clock, and then all of a sudden it comes back a little bit, and we'd only get a plus or minus 20. So that didn't happen. So let me just run the numbers as we're going into the break. The Dow's down 115 at 15,976. The S&P is down 16 at 1890. And the trend is starting to rally a little bit, and the VIX is at 2370. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So we're looking at the Dow down 112 at 15,981. Parameters again, if Friday's low of 15,921 is taken out, that's really a very bad sign. However, I just need to point out something. Let me go to this that I show my subscribers every day right here. The left side low, make this a little bit bigger so you can see this is the daily chart, gives you Chapman wave notations, everything that pertains to a chart pattern that I look at, chart patterns that I look at. See that spike from the August low of 15,370? It went up. The next day was a lousy day, horrible day. It looked like, oh my God, this is going to fail again. And then the next day just kicked in from the open and went shooting right up to 16,669. But then it came back and made 15,970. Let's call it 16,000 as a kind of a base for a while. Not a while, actually all the way through until the very beginning of October. Was that the last day of September? The very beginning of October, last day of September, 29th of September, last trading day, I think. And look at this. All of a sudden, it started to move up sharply. So the best case here is that we go make an arch formation, we come back maybe another day or so, and then we start moving higher. Not sure how much higher we can go at this particular point. That's why I'm calling today a really important session, because that and General Electric are going to give me a great deal of information, I believe, about the week, and then the week should give you information about the monthly chart going into February, because we'll have closed January. So those are the parameters. 16,131 is the 9-period exponential moving average in the Dow. It has to be surpassed, and it really should have been surpassed, I said, by Tuesday. I don't think you can do that. Maybe by Wednesday. I'm not sure. Okay, here we go. And the S&P, SPX.X, SPX.X, trading at 1891, down 15.61, made a trough F, and we're going to see how high this can go. So far, this is going to be great peak A, and the parameters we're looking at, 1901 is the 9-period exponential moving average resistance. It's 10 points higher. Not the point. The point is it needs to get into the 1910, 1912 area to really show that it can challenge the 1920 next moving average resistance. Let me show you this here. This is the 14-period exponential moving average right there. So the 14 would be next after the 9, and 1920 is the resistance this week. But major support is at 1883, 81-ish. If it takes out the low of Friday, which was 1877.40, that is really not good action at all. It's really not good action based on the weekly chart as well. The weekly did hit the 9-period exponential moving average of 1813 and has rallied very sharply off that. This should have been a rally. Today should be no more than just a little mixed doji kind of close, and bam, tomorrow's on the upside, a triple-digit gain in the Dow, a really strong double-digit gain in the S&P, and that should have taken it by Wednesday right into the 1915s. So that's a lot of work to be done. We have made a peak D in the 120-minute chart, so we can pull back. Let me just quickly show you. I'm going to show you more and more the action in. Give me a second. Just want to change this because it's getting a little bit messy. I hate messy charts. This is the Roman candle right here. Looks like if we have a rally this week, you can make another Roman candle. I would like to think that we've just made the low of the day, and then we're going to slowly drift towards the upside. That to me would be very important. So the S&P monthly chart is in leg B to the downside, and the MACD and stochastic are very poor. Let me just do the VIX index, because right at this particular moment, it's probably more important. We're looking at the VIX. It's up 1.17 at 23.51. Yeah, it's good action, but the chart looks like the VIX is going to be going down further. Let me just do this. So look at the monthly, look at the weekly chart. The weekly chart still closed, even with the horrible turn down on Thursday and Friday. It's still closed above 21.88. The 9-period exponential moving average in the weekly. I have to tell you, we're going to be looking at this really closely. So now we're going to go to the IWM. IWM is trying to rally, and it tried to rally, but it's failed. It's down at 123 at 100.13, making a peak A right at the 9-period exponential moving average. Not a good-looking chart. If you put it together with the NYA, of course, if you type that incorrectly, it's just changing from keyboard to keyboard, about 3 or 4 keyboards around here. That I got to get used to the. I'll never get used to the differences. It's a little bit like playing clarinet and then going to the bass clarinet. You got to change its bigger fingers. I mean, well, you got to stretch your fingers, or the saxophone. So here we are. This is, see that skinny little wick of the candle. I'm not a great fan of that kind of. This one is, the green one was a little bit better. It did rally, but even then, this kind of candle is, you got to be real careful. So all I'm looking at is now the New York Stock Exchange at 9,328, down 98. It's really struggling. It's just not a good chart. It's gone really deeply to the downside. Look, it almost tested last week the low of June of 2013. So most of the charts, like the Dow and the S&P, didn't even test their February 2014 low. So that was a good sign. So now let's go to the QQQ series. Look at this. Not a much better candle. It's at 0.46. It's at 103.31. It has not 103.81. Yep, it's making a peak E if there's no new high today. Meantime, back at the ranch, the technicals are a little bit better. The whole chart pattern is a little bit better. And that's one of the reasons when I look at this, I say, I think I'm going to be correct. I don't know if I'm going to be correct, but I'm thinking that there will still be another big move to the upside. Doesn't even go close to the all-time high this year. I don't know, but I'm still expecting something to happen later. Not now, later. We're looking down first before we look up. So now let's look at gold, because this is very interesting. The gold chart on the daily is really quite good. The MACD is strong. The stochastic's at 74%. I'd prefer if it was higher. It's up 950 at 1105. The weekly chart is progressing steadily. It's not great, but that's really not the issue. It is the doji candle. This can be so significant. Look, when you have had a major move from the top side of 1949 down to a low of 1,045, that is a 900-point decline. Getting so close to the 200-period exponential moving average, yet still not breaking it, going sort of slightly, let's step down slowly to the downside. This tiny little candle, we've never had this kind of candle. Even this candle right here, November of 2012. No, not even the candle of July of 2012. Not even the candle of April of 2012. This is the tiniest little candle Oh, wait, there was a tiny little candle. Oh, there were two little candles there, but not as tiny as this one. Yeah, that one is. The candle of April of 2015, that little, like a T, an inverted T. Yeah, but it wasn't, it was below the 9-period exponential moving average. So you couldn't go above it. If after this candle on Friday, the gold contract, the continuous contract closes anywhere into the 1,135 or higher area, hey, it's only 30 points higher than where it is now. I would have to say to you, at least on a shorter term, being a monthly chart, I'll have to say short to maybe intermediate term, there could be a rally in gold as the financials and other areas in the stock market get hit. So, wow, time is flying by. We've got another break coming up, and I'd like to go to, if I can, let me just do this quickly. Yep, the dollar is pulling back. It's at 99.36.21. It did break above the resistance, but it's not holding. All right, I'll be back. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, folks, we're back. Basil Chapman. Dow is down 91, trying to come back. The S&P is down 12. And I just got information to say that, yep, my subscribers corner, everything did go off very well. Everything was posted to the site. It's just me that's having some kind of a problem. So that's great. As long as everything went, it was a little bit of a concern of mine. And because I always like to get everything out by 8:35, 8:36, everything goes. So final chart out of the 5, 6, 7, or whatever number it is this weekend, I think was a lot more than that. So, let's go to this. So the dollar is making it's making like U-shaped patterns, and every U goes to a higher right side high. So it goes peak A, pulls back, cup formation, whoop, peak B, did I say arch? I meant a cup, and then it pulls back, holds the trend line, boom, goes to leg C, now it's a peak C. So I'm anticipating that there's like one more bounce in the dollar to come, and that's going to be very important. And simultaneously, what I'm looking at, let me go back to the gold chart. What I'm looking at in the gold chart is that it is a starting process. And you see the way that the weekly chart technicals are improving, but they've done that before. It makes no difference how much they improve. It is up until the point that the stochastic remains steady. And that to me is very important. That's number one. Number two is a V-shaped formation is what I was expecting in gold. I think that we will still get that, but I'm also expecting that peak A minus that was made, another one of those peak A minuses, and many of them that have been made on the rally failures. The last one was going into, was it October? Was it? Yes, October at 1191.40. I'm thinking that this new leg A up is going to rally and test somewhere in that area, 1191. Not a bad rally. But what's really important is how the gold stocks act and react. So it's very important here, because if we suddenly see the dollar have that one big spike to a new recovery high and then start a deeper pullback, and that deeper pullback, the dollar should do this fairly quickly. It should probably do it this week, and gold should hold steady, making the 1191, 1188-ish area support. And then it's ready for a nicer move, start a leg B up, and that B has a long way to go. I mean, let's face it, 1191, that's a pretty darn good move. It's about an 8% move from where we are. So when I'm looking at this, I say, okay, don't get too excited. Gold has done this so many times, lower lows and lower highs, lower lows and lower highs, just like the dollar has made higher highs and higher lows. So it's more a trade than a position at first, but it could become a position if you were to nibble on a certain, the next pullback maybe in gold. That's what I'm looking at. All right. I wanted to do, I did the VIX index. Oh, let me just finish up on the VIX index. And the VIX index is going to say that over 2450, it's 2344, so a point higher than it is now. It goes back over the 9 EMA. You've got to be careful. I suspect that this is just backing and filling from the big move we had up on Friday, and nothing to get too excited about. It's starting to say the upside might be even more limited, but at this point, it's how the downside reaction is. So in the VIX index, climbing above 2450 is very important for more selling to come into the market, and closing below Friday's low of 2222 would be very negative for the VIX and very positive for the market. Let's go to Scott in Safety Harbor. Scott, how are you?
Great, Basil. Great call that you made 2 weeks ago on Alcoa.
Thank you.
You told me it was going to pull back, and I did suggested that I move half my position, and I did. And then brought back at a lower price of $685. So I'm pretty. Good. So I am now entering into the realm of concrete with CX. I've been playing with that for about a week. It's in a nice little trading range from like 390 to 430. So I'd like you to take a look at that, please.
Okay, this gives me an opportunity to talk about a couple of things. Wasn't this once upon a time CMX? This is a CEMEX. Is this from Brazil? I think so.
No, it's the largest concrete company. It's out of Mexico.
In Mexico, of course, Mexico. Yeah. So I always thought that was CMX. You'll see the trucks
all over the place in Florida, Georgia, New York.
No, you're absolutely correct. Yes. So this is going to be very important because it ties in a little bit with the commodities that I'm looking at. So you have to put it into the category of economic growth. You've got to put it into the category of what's happened to commodities in general. This is not a commodity. This is cement, but the chart looks like a commodity chart. This is it's a nice entry point, but I have to tell you one little thing. The pattern that you're looking at now with the single leg A up, folks, we're looking at CX is trading at $4.07, down 29 cents, had a fabulous move on a percentage basis. In fact, a spectacular move from 364. Let me just put in 364 here, and I'll show you something. 364, and it went from 364 to $4.58. So that's about, what, a 28 or something, I'm doing off the top of my head, 28 something percent gain just in 2 days.
Yeah, 2 days it did that. So it was a wonderful. I got in at the 375, and I just couldn't believe it. It was just fabulous move.
It is. It's a very good move. Now, there are a couple of things that I spent a little time over the weekend also going through my heavy-duty cyclicals like the like X, which is U.S. Steel, which has also had a fabulous move from the 630, I think it is, from 643 to 780. That's another big percentage move. Alcoa finally did have that nice move that you were talking about, and it went from the low of $6.14 to $7.42. Another huge percentage move. So I'm just going to put this into the category of chart formations. So now, when you're looking at it, I would say to you, do you take anything off on the pop, or is this a position that you're looking at as at least an attempt at a buy and hold?
It's a day trade. It's a 2-day trade. That's what I've been playing with it on. Is about a 24-hour period.
So my question here is,
did you get into a position right this minute? Actually,
did you take something off on the big pop?
Oh yeah, absolutely.
Oh, okay. So now you're looking at a clean trade. That's what I needed to know. So what I'm looking at, folks, I'm going to show you this. This is very interesting. On the 120-minute chart, it's showing you that it had a very good move, and I just want to double check that is 402 to 401. So this is peak A, peak B, peak C in the 120-minute chart, but I do not like when the peak C decline is a little too deep. So I'm going to make 2 suggestions. One is, I don't know if you've already added back to the position or if you're still waiting. Have you got any position at all, or are you still waiting for that position?
I'm waiting right now to pull the trigger right as we speak.
Okay, so then give me 1 second. I'm going to get out of this chart. I was going to discuss the 1937 top in the Dow and now, but I'll do that. There's no rush to do that. So I'm closing this workspace. I want to see if what my eye is telling me and the technicals are telling me is confirmed with my Dow. No, sorry, that was wrong. With my analysis of projections. So I need to give me 1 second here. Okay, I'm getting this up, and I'm going to do a little bit of work because I don't want you to jump in too soon. I'll be back in a moment. If you can hold on, Scott, you're looking at CX, Cement Company, and I'll be right back after these brief messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. So, Scott, I'm going to make 2 suggestions. One is, because it's come down pretty sharply, we're looking at CX, which is Cemex SAB. This is a Mexican headquartered cement company. And one of the things that I'm looking at, it broke the support that I'd be looking for around about $4.08. So if you have the patience, I would prefer for you to be buying on a rally rather than to try to catch a falling knife. But here's the level I'd be looking at on the downside. On the downside, it's imperative that $3.92 holds. Do not want it to go below that. But if we're at 11:45 right now in the morning, if at 12:15 it suddenly started to stabilize and it's starting to move to the 410, 411 area, I would only put a starter position there. In other words, this is not your full position. This is just a test to see whether or not it needs to test the low that's made in the next half hour. If that's 404, that's great. If it's 403, that's fine. 402 is fine. But if it breaks $4, you're going to have patience because that 392 level beckons on the left side. Time-wise, price, everything about it says right here, it should start to move up. And if it moves up from here, this is going to be good. So I would prefer for you to be buying a rising level. That's number one. Number 2 is, as I said, there are 2 parts to this. I would add only later in the day, if it really shows that it's made a low, it's comfortable with the low, and it keeps moving up in 5-cent increments, and it hasn't pulled back more than 7 cents on any one of those big moves up, that's going to be a good sign that maybe you could add again. Most importantly, this is in an area where, if I'm correct about a recession already unfolding in various sectors, but overall we're now starting to see that there's possibly a general recession underway, then I don't really see why this stock should do much other than have a nice bounce. So I don't like the deepness of the pullback right now. I'd only buy a little bit on some strength, and I'd even say my way of trading here will be to sacrifice a big move up, rather have comfortability saying I can add if it starts to break out, and absolutely if it goes by 1 penny above 458, the high of the 22nd, I would add another position because that starts leg B, and then all of a sudden you'd be looking at the 9-period moving average in the weekly chart of 490. So one step at a time. So there's two things. One is if it starts to rally, I would at about the 410, 411 area, I'd start a small position. If it pulls back, have patience, see how it holds the 390, especially 392. Hope that helps you.
Thank you very much, Basil. No one has a grasp on the market like you. You're the best.
I'm just going to add one thing, Scott. Alcoa, that's a better chart formation right now for a bounce, only a bounce, then CEMEX is right at this moment. I just wanted to show you.
Well, I'm glad you said that because I'm really kind of at a coin toss right now between CX and Alcoa, which one that I'm going to start working on. So you think I should lean more towards the Alcoa at this point?
Well, Alcoa,
it's beaten up pretty bad, Alcoa. I don't really see that. I mean, there's an intrinsic melt value, you know what I mean? So
let me just show you. In my work with my Chapman wave projections, the 414, 416, 409 level in CX is a key support, and it's really testing. It's actually below that right now. So that's why I'm watching it closely. When I get to Alcoa, it has resistance in the 690, 698 area, but it looks more as if...
I'll tell you why I'm leaning more towards CX, because there's so much in the news about commodities, that it, even if Alcoa has some juice in it, that sentiment is going to keep Alcoa down, whereas CEMEX keeps following the commodities, but it's really not, you know. They're pouring cement all over the place right as we speak. So.
Okay. All right. Well, I'm leaving it to you, but I just want you to tell you that was the scenario I'm looking at. But both of them in this market environment, this is only a bounce. I would not even get carried away. It's just a trade like you do. Get it in, get it out, and that's it. So good luck, Scott. Thank you for calling.
Bye-bye.
So let's go to Jerry in the Back Bay. Jerry, how are you?
Good. How are you?
I'm well, thank you.
BBN.
So BBN right here. It's familiar to me. It is BlackRock. Okay, BlackRock.
Yeah,
which is
it's the Buy America Municipal Bond Fund.
Okay, so
I'm negative on the economy, and I own the 30-year bond.
Yes.
And I'm interested in this thing because it's pays a yield of about 7%, and the government backs up the bonds. They put these bonds out about 7 or 8 years ago called Buy America bonds. They're not tax-free.
I forgot all about that. Yes. So is it tax-free?
No.
Oh, it's not. I was just going to say it's 7%. That would be unbelievable.
Yeah, it's not tax-free. But you can get the government backing, and you can put it in an IRA. And if you think the economy is going to go bad and rates are going to go down.
So let's just do this. We've got. I'm just doing some notation. A, B, C, D, and I believe this is a brand new A, B, C, D. I think you're absolutely correct. It looks really good. It is getting to a little bit of a toppy area in the daily chart, but with very good technicals. It's the weekly that is really this cup formation has a way, although you never believe it because it looks like you've got your Grand Canyon on the left, and then all of a sudden you've got the climb to the right, which looked like it was struggling, and then it starts to take off, and the next thing you know, you're looking at the previous high of importance. This would be the first one in April of last year at 2314. BBN right now is BlackRock Taxable Muni Bond Trust. So, folks, just remember now, you're buying this. You're buying this and getting the yield. Basically, you're treating it as a dividend stock. Am I correct?
I am. Yes.
Okay. So that I just wanted to know.
That swing. That's when people thought the rates were going to increase. Everybody's talking about how many rate hikes and that the rates are going to go to 3% on the 20-year.
Right.
And the whole world has changed in my mind. And
not realizing we still have the Japanization of our bond yields in play. Who knew? Who would know that it would go on for so long? You know what? I think you're in a very good position here. The levels on the I won't talk about the upside because we know that these cup formations have a way of being attracted to the previous high, which would be all the way in the 2314 to 2348 level. That was the high of February of last year. That's not the point. I think the point that we have to look at here is what is the security on the downside? Is there a 7% or a 10% risk? And what I would say to you right now, the 2194 9-period moving average to the 2162, and I always have to double check because I've changed these a couple of times. This is the 21-period exponential moving average at 2162. That says to me two things can happen. One is if there is a pullback, you would have the inversion of the rectangle formation that I was talking about in the weekly chart of the SPY, where it comes down sharply, rallies, goes almost to the top and can't make it, and then comes back and retests the bottom. This is, you could see the exact opposite. It's kind of what we're seeing in the weekly chart. Jerry, can you hold on a second? I'd like to do a little more work on the monthly. Okay, we've got Jerry in the back bay.
I would like to buy more. All right, thanks.
All right, we've got Jerry listening in from the back bay at 2226B.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Well, I just finished that. That's how long it takes to go all the way back for however the duration of the issue is to do the notation, and we just did that. This is the good questions in the den. Taxable Muni Bond Trust. Yep, that's what it's called, the taxable muni. So let me just do this here. Jerry, this is what I'm going to suggest. Because it's up today, up just 8 cents, but at 22.26, I'm thinking that in a sense, it's got its own momentum to the upside. So I've got a notation here that says I'm calling it C. It could be alternate count G. And even if it's C, it says that, even if it's G, it says that the way it's acting, it could still have another spike to the upside to make it D. So I'm looking at this, and I'm going to suggest to you that if you've got the, I know you've got the patience, but if you've got, when you're in your own thinking, if the difference between 22.28 and 21.80 is so slight that it doesn't really matter to you because you want to hold this, and there's a chance that on a weekly basis, this is a really good opportunity to get into something that's leading the market. It's showing that in this market environment, it's doing best. Its relative strength is extraordinarily high compared to what we're looking at if it's against, say, the S&P. I'm going to suggest you can think about it. Probably the best price would be between 21.20, it's a point lower, and 21.80. And if it did pull back there, you'd actually think that it could go a little bit lower. But if you're thinking 60 cents, that's 60 cents is, let me just do that, that's a 3%. That changes your cost basis by about 3%. I'm going to suggest you could start a little bit right now at 22.28. You could add just a little bit, but the best place would be about 60 cents lower. This is just pure on a technical basis. If I'm looking at the weekly at 96% in the stochastic and the MACD very strong, I would say to you that you could have 4 positions. You could say right now, another on a pullback to the 2190s, another one on the 2162, and an outlier that would test the low of just the other day of 2150. And that way you would have positions, because the weekly chart is suggesting that any pullback should find tremendous support in the 21s and that it should be going higher over a period of 4-5 weeks.
Yeah, I think it'll do the opposite of the stock market.
That's exactly what I'm thinking. But in this character that we're looking at right now, of this is just the first leg A up from the low, is there going to be a B? I don't think there's going to be much more than a C, but I'm thinking only a B in the weekly chart, and then we start to pull back again. I think that you've got yourself there's a hesitancy of maybe 3 to 5 days if the market actually starts to move higher and this actually pulls back because the market is going higher. So I'm looking at this as, I think you've got the monthly chart, of course, is not finished, January, still got a few days to go. But the monthly chart really suggests that it wants to go above 2348 for leg C in the monthly chart.
All right. Thank you very much.
Hope that helps you. Thanks so much for calling. Always appreciate it. That's Jerry in the Back Bay. So Back Bay of Boston. I'm sorry, folks, about what happened last night. That was upsetting. I did get to see some of it. And even though I'm not a football, I wouldn't say I'm not a football fan. I don't even get into that category of fan. But I love watching it when I do watch it. It was really very, very exciting. Even for a novice like me, I could tell that the last, 14 seconds. I love the game where you've got 14 seconds on the clock, and 14 seconds can take you who knows how long. It's unlike rugby or soccer where you've got 14 seconds. It's almost close to 14 seconds. Hey, a break coming up, and then that's it for the show. Hey, folks, thanks for being here. Check out my opening call. Everything went very smoothly, I believe. And I'll be back tomorrow. Have a great day. Stay tuned for your swimming lessons and all the other shows. Wow, that was a quick hour. Be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.